Imagine waking up, finding your savings silently eroded. What if I told you there's a secret tax? Not levied by your government directly, but by the very institutions sworn to protect your financial stability. This isn't income or sales tax. It's a hidden, insidious drain on your purchasing power. And most people are completely oblivious to its existence. This is the inflation tax, and today, we're not just exposing it. We're giving you the blueprint to beat it. Welcome. We decode microeconomics and uncover hidden financial loopholes. The inflation tax is perhaps the most significant, yet least understood, economic force silently stealing your wealth. It's a phenomenon where the value of your money diminishes over time, not because of your spending habits, but due to policy decisions made in distant boardrooms. Understanding this isn't just academic. It's fundamental to protecting and growing your assets in an increasingly volatile global economy. Let's unravel this. When central banks engage in quantitative easing, or print more money, they're essentially increasing the supply of currency in the economy. This isn't free money for everyone. It dilutes the value of every existing dollar, euro, or yen you possess. It's like adding more water to a glass of juice. The volume increases, but the concentration of flavor, your purchasing power, weakens. This direct correlation is a core microeconomic principle on a macro stage. Who suffers most from this? Savers. People who diligently stash their cash in bank accounts, expecting it to grow, often find themselves falling behind. Meager bank interest rates rarely keep pace with true inflation, meaning your safe money actually shrinks daily. This subtle erosion can wipe out decades of careful financial planning without you ever seeing a direct deduction. And it's not just savers, fixed income earners, retirees living on pensions, and anyone not strategically invested in inflation-resistant assets are disproportionately affected. Your hard-earned money simply doesn't stretch as far as it used to, making everyday necessities feel like luxuries. This disparity widens the wealth gap, making the rich richer and leaving others struggling. Many people see their salaries go up, or their investments show nominal gains, and think they're doing well. But if your salary increases 3% but inflation is 7%, you've taken a real pay cut. This illusion is a dangerous trap, preventing people from seeking actual financial loopholes. We're talking about real value here, not just the numbers on a screen. The central banks often frame their actions as necessary for economic stability, to stimulate growth, or to prevent deflation. While these intentions may be noble, the byproduct is often a silent wealth transfer from the general public to those who understand how to navigate this hidden tax. But you don't have to be a victim of this system. So, how do you beat this silent killer? The blueprint. Stop holding excessive cash. Cash is the ultimate victim of the inflation tax. Instead, your money needs to be working harder than inflation itself. Loophole 1. Strategic asset allocation. This means investing in assets that historically perform well during inflationary periods. Real estate, for instance, often sees its value appreciate as construction costs rise and rental income adjusts upwards. Land, physical properties, and even REITs can act as powerful hedges against declining currency value. You're exchanging diminishing paper money for tangible assets that hold or increase real worth. Commodities like gold, silver, and even industrial metals are classic inflation hedges. They represent real resources with intrinsic value, making them less susceptible to currency debasement. When the cost of everything else goes up, the price of the raw materials that make those things also tends to climb. Don't overlook diversification into these core assets. Certain equities can also be powerful allies. Companies with strong pricing power, those that can pass on increased costs to consumers without losing market share, are often good performers. Think essential goods, energy producers, or companies with monopolies, oligopolies in their sectors. These microeconomic powerhouses withstand broader economic shifts. Loophole 2. Leveraging debt intelligently. This might sound counterintuitive, but in an inflationary environment, holding fixed-rate debt can actually be beneficial. If you borrow money at a fixed interest rate, and inflation runs higher than that rate, you're effectively paying back your debt with cheaper dollars. This powerful financial loophole built empires for the wealthy. Buy income-generating assets with fixed-rate loans. Asset income grows with inflation, while debt payments shrink in real terms. Loophole 3. Diversify into alternative and decentralized finance. While traditional assets are crucial, digital realm opportunities offer significant advantages. Cryptocurrencies, especially those with fixed or deflationary supplies, hedge against fiat currency debasement. Decentralized finance, DeFi, offers platforms for lending, borrowing, and yield farming that can potentially offer returns far exceeding traditional banking rates, though with higher risk. Understanding these emerging landscapes is critical for a truly modern financial strategy. Loophole 4. Invest in yourself and your income streams. Ultimately, your greatest asset is your ability to earn. Investing in skills, education, or starting a side hustle that generates inflation-adjusted income is perhaps the most resilient strategy. Your human capital appreciates in value. And unlike fixed income, your salary and rates for services can be adjusted upwards to match or even outpace inflation. This personal microeconomic growth directly combats the silent tax. Bringing it all together, actionable steps. The key isn't to panic. It's to understand and act. Review your financial portfolio. How much cash are you holding? Are investments protecting your purchasing power, or falling victim? Start by diversifying away from excessive cash into real assets, strategic debt, and explore new financial frontiers. Continuously educate yourself. Knowledge is your strongest shield. This isn't about complex algorithms or insider trading. It's about recognizing fundamental microeconomic forces and making smart decisions to leverage the system. The inflation tax is real. It's insidious, but it is beatable. Your financial future depends on your understanding and action right now. There's much more to uncover about these loopholes. From real estate to DeFi, we've only scratched the surface. To help you go deeper and get started immediately, I've put together a comprehensive, free guide, the Inflation Escape Blueprint. It breaks down each strategy with actionable steps, asset classes, and risk management tips. Don't let the silent tax continue to steal your future. Your money deserves to work for you. Click the link in the description right now to download your free guide and start building your financial fortress against inflation. The power to protect your wealth is within your grasp.